on Editor's Cut. We've all given our takes of how we've seen the week gone by, the situation, and what we think is going to happen. How are you looking at things?
Well, good afternoon. I think markets are beyond geopolitics. We've discussed a lot of geopolitics in the last 1 month, but I think the good, bad, and ugly, all of it, I think, is now in the price. Because if the situation intensifies, the market is not reacting. If the situation gets better, the market is also not reacting. So I don't think it's a bad place to be in, because markets are now looking at more domestic related factors, which is India's earnings, consumption, AI-related disruption, FI selling, and all of it is pretty much there. So I really feel that it's a battle between domestic liquidity and all other factors. And it's really domestic liquidity that has kept this market afloat. Because if you look at that one chart of Nifty versus the world, you'll realize that the Nifty versus the world, we are actually at a 52-week low, despite all the strength that we've seen in the last couple of months. So I think in an overall context, I still feel that the Nifty and the large caps would not do anything substantial. I said this last time in our interaction as well, that 24,600 could be a ceiling. Right from that level, we've seen a bit of a downtick. And we are yo-yoing in that band of 23,500, 24,600. And if Nifty was a team, if you look at the players of the team, IT, FMCG, Reliance Industries, SDFC Bank, none of them are firing. In this environment, you can't expect the team to do well consistently over a period of time. And given that, I still feel that the Nifty and the large caps are going to go nowhere probably for the rest of the year, and they will just continue to languish in a range. But in this very period of the last 3 weeks, we've seen so many themes do well. Metals, PSU, energy, the entire Adani group, real estate making a comeback. So be in specific pockets. This is a stock-specific market. We are facing a lot of headwinds, but smart money is actually going into value, and growth stocks are not doing well. And I think this is a trend for the rest of the year.
It's a very interesting point that Gautam is making over here, because if you talk about the range, I was just looking at Nifty 50 range from the 3rd of March to now. It's been a 2,200 point range from the lowest levels of Nifty 50 to the highest levels. A low of 22,182 to a high of 24,601. Likewise, Bank Nifty has been in a range of 10,200 points, a low of 49,954 and a high of 60,177. Now, when Gautam is indicating that probably this is going to be a market where you will see value and not growth, it connects me to what Rhythm told us, that there is pessimism in sectors like banks and IT, and wherever there is pessimism, that's where value will come in. There will be no growth. So don't run behind growth, run behind value. So probably these could be sectors one should be investing in. The question is then, do you really stick with that kind of a scenario?
I think I'm curious to know what Gautam is seeing as value buys right now and where those spaces are. Gautam, are you looking at any of the Q4 data at all? Does that make sense right now in the current context?
Well, I think the bigger problem is really consumption and the economy itself, and the fact that do we really deserve such rich valuations versus the rest of the world? For the last 3 years after the COVID rally started, 2020 to 2023, everything was justified because things were on track. AI disruption was not there. FI selling was not there in that magnitude. But I think things have changed quite a bit in this last 1.5 years. Because if you look at other markets of the world, look at what Brazil has done in the last 6 to 8 months. Look at what Korea has done in the last 1 year. Very, very massive moves. Look at Japan. It's trading at lifetime highs today. So I, as a global analyst, when I look at many of these pockets, I just find that the India piece is really not top down. It's really bottom up in terms of opportunities. But coming back to that point of value, the fact that Coal India, NTPC, NMDC, Power Grid, SBI, SAIL, all of these stocks have done phenomenally well in the recent past, that they've held out beautifully. So the message is loud and clear. Be in the entire PSU basket. I think that's where clear value is. Energy, obviously, for its obvious reasons, is doing well, and metals, fundamental analysts still don't have an understanding as to why metals are doing as well as they have in the last 6 months. But I see a massive base metal rally coming, with copper, aluminum, zinc, lead, all likely to do well. So that's again an opportunity. But if you look at the growth stocks, if you define HDFC Bank and Asian Paints, for example, as typical growth stocks, look at what they have done. I think the writing is on the wall.
Gautam, we were debating about the Indian rupee and whether gold can come in from the Indian perspective as a foil or as a hedge. I wonder what you think about, one, the currency pair, and two, the yellow metal and the way that it has behaved in this year.
You know, on the currency, every time I've tried to be a little optimistic, the market has failed me. And I think it's happened every single time in the last every single time in the last 6 months. And I think when it rallied from levels of 94.5, there was this feeling that maybe now things are getting slightly better. But I think in the last couple of days, it's back to levels of 94, 94.5. And forget the Indian rupee versus the dollar. Look at what it's done versus euro. Look at what it's done versus pound. It's really a sorry state of affairs. And when I speak to many of the institutional investors, not only are they complaining about no relative returns for Indian markets, large caps, they're also a lot complaining about the currency. So I think this is a problem that we are definitely dealing with, and with oil at levels of 100 and beyond, that's not helping. That's the reason I said there are just too many headwinds. In this environment, can you actually park your money in gold and silver? If you really look at it, it's gone quiet. You know, last 2 months have been very quiet action for gold and silver. So much has happened on geopolitics. Logically, you would have expected gold and silver to make new highs. That's not happened. And they're not collapsing as well because there is a lot of demand at lower levels. So I think they will consolidate. So don't expect serious returns in gold and silver. You should stay invested, but you should pick the right price to buy, which for me is 4,300 thereabouts for gold and 6570 thereabouts for silver. But coming back, I think the real opportunity is micro cap and small cap, because there is probably less FI selling or no FI selling, low DII ownership, and probably companies can do far better, you know, in that landscape because they're not getting disrupted overnight.
Just to that point, Gautam, the opportunity certainly existed in March, but I'm just wondering, after this, and we were talking about it earlier in the week, out of the 500 stocks in the Nifty 500, you have, you had over 300 at one point that had gained 30% in the month of April alone. So you're saying that there still exists a lot of opportunities in the small and micro cap space?
I think so. So microcap index, just to put numbers, is up 22% from the recent lows. Small cap index is up about 18-19% from the recent lows, which is very large. Now, don't look at NSE 500 as a metrics because that's predominantly large caps. But if you look at the total market index, which is about 750 stocks, which I think will give you the exact color of the market. So I do believe that the real opportunity is in stocks where the market cap is somewhere between 1,000 crore and 30,000 crore. That's my working basket. In fact, that's what we have been recommending at Goldilocks. And I think you're going to see a lot of big moves coming in there. Remember, this entire space has seen massive price destruction for the last 18 months, where on an average stocks have fallen 45%, irrespective of the fundamentals. So the comeback had to happen. And even on down days right now, you are seeing a lot of micro caps and small caps. Even today, the micro cap and small cap screen was quite decent, I would say. So I think this is an opportunity which is likely to stay for the rest of the year, mainly because of domestic money.
I'm wondering, Gautam, are you then not at all constructive on the Nifty?
I'm not, Tamanna. I mean, it will keep you interested. It will keep jumping either side. It will keep tempting you both on the greed, and it will keep getting to a point where it will get a little fearful, but it will not break out or break down. You know, had this been a different kind of an environment where there was no domestic money, I would have said that we would have fallen a lot more. But I think it's good to be in a range. You know, in technical analysis, we say that correction are of two types. One is when you actually fall and correct. The other is you go sideways and you correct. And I think we've gone through that sideways correction actually for the last 18 months, if you really look at it on an overall basis, which is good. And I think the market is finding its footing. Hopefully the next couple of quarters, the earnings season goes off well. And then I think people will start to realize that there is definitely an opportunity in India. But my bigger concern is there are just too many opportunities in the global landscape, you know, around the world, with S&P 500 today at lifetime highs. I'm told Google came out with wonderful results just an hour back or something. So I think given all of that, you have to think globally as well and not just look at the Indian markets.
So are you saying, Gautam, invest globally and not in India right now? Because in India, if you're talking about markets, it's mainly with regards to domestic-oriented sectors and not anything which have exposures to the export-oriented markets. But Apart from that, you could be looking at S&P 500. You could be looking at what's happening with the Nasdaq. These are these are indices which have actually jumped quite a bit.
Unfortunately for an average investor, it's very difficult to invest globally because you just don't have too many products. We can keep talking about it.
Thank you for saying
but
that.
an average retail investor or an HNI does not have that product. And even if some of the popular products that are available are a typical S&P 500 and a typical Nasdaq, which has already seen a massive move in the last 2.5 years. So that's genuinely a problem. But for somebody who's only looking at the India story, be in the right pockets. We really try to be in PSU metals.
You have to tell us a few more pockets apart from PSU metals, because our Desi guys, how many of them can invest, are investing. But you have to leave us before we wrap up and look for the next week with some great ideas, Gautam.
I must say this, diversification is dangerous in today's market environment. We've all been learned that you need to diversify to do well at the markets. Diversification has actually not worked for a lot of market participants in the last 2 years. And I think if you are concentrated and if you are in those select basket of stocks, very few handful of stocks in the large caps have done well, and a lot of stocks in the micro caps and small caps have done very well. So stay concentrated, stay in a huddle, stay with companies, which have nothing to do with foreign policies, stay with companies where there is earnings visibility for the next 5 to 10 years. And as I keep repeating, for me, it's metals, PSU and energy. I think they'll do much bigger things going forward. Do not try to buy growth, which might be available at good prices. I think we can get weaker and weaker, and it's going to be more difficult for market participants in that environment.
Stay in a huddle. I think that's a good takeaway. Gautam, thank you so much for joining us on Editor's Cut this week. And I think wise words there. I don't remember the last time I heard Gautam Shah saying he's not constructive on the Nifty.
Nifty, yeah.
Yeah, that's telling to what kind of times we are in. Having said that, we started by saying that the word of the week is confusion. It's very possible that, in 24 hours from now, we'll be extremely optimistic. By Monday, the world could have changed and we don't know in which direction.
Yeah, I mean, you have 3 days to deal with where you are not going to see any market reaction, at least in India.
Yeah, flurry of posts and commentary that could come in, that could change
on either side.
On either side. So I suppose stay nimble is the biggest takeaway that we can give you. But that's all the time we have on Editor's Cut this week. Tell us what you think about the show. Tell us what you think we should add in it. And we're listening and waiting to hear from you. Thank you for watching.